I think the economy is slowish. I think first quarter number is going to disappoint. Fourth quarter number got revised down. Still not horrible. And look, last year, even though they're not going to call it, was a recession. It was a mild recession. 1% year over year, 0.9 year over year GDP. That's recession. That's a 2001-esque recession. And I think in the absence of the global wave of liquidity, right? Had China not printed $1 trillion, had, Kuroda-san as his, going away president, not printed another 200 billion, had the Fed not stepped in with Silicon Valley et al. With this BTFP, I would be more negative on growth. I would say, negative GDP growth in Q1. I would say negative GDP growth in Q2. I don't see that, right? I see a one handle in Q1. And look, I think the biggest indicator is the 10-year. The 10-year yield has collapsed, right? It's down from 4 something to 3.4, something like that. And that's telling you that growth is decelerating, not accelerating. Yet, if you look at Chinese liquidity provision forwarded 6 months and PMIs, it would tell us that PMIs have troughed and that economic activity is going to rise, albeit slowly. But so I think we're going to avert the hard crash landing. This idea of no landing, I think that's just a silly idea. That there'll be a landing. And I think you see it in activity, right? I went to a restaurant with the family the other night, and it was bustling. It wasn't slammed, but it was bustling. And again, this is a nice restaurant in, we don't have very many super nice restaurants in Chapel Hill, but we have a couple of nice restaurants. And it was full. And that's a good indicator. The airport over spring break, slammed. A lot of people traveling for spring break. So, yet traffic, I don't know about where you are, but traffic is a little bit lighter than it was. That's usually an indicator to me of economic growth. So to answer your question, where are we in the business cycle? I think we're past the trough. I think we troughed, middle of last year, third quarter or something like that. We kind of fudged the numbers with the SPR, right? We would have had much worse GDP prints last year if we hadn't drained the SPR and double counted the oil. I think that's a scam, but people believe it. Okay. If they start reversing that and start putting oil back in, that could juice that could hurt the numbers the other way. But I don't know. We'll see. But remember, the 60-40, worst year ever. 140 years of data.
Bonds got smoked.
Your average
got smoked too.
401k had its worst year ever. Now, it wasn't a, 401k turns into 201k, like the global financial crisis or 2000. But it was ugly. I mean, it was ugly. And if you owned tech stocks, ugly, right?
Ugly.
I mean, we're talking down 35, 40%. And you've rallied back 15, but you're still down a lot.